Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic day today. In today's video, we are taking a look at both the macro and the short-term charts, discussing exactly what is happening for Bitcoin, where Bitcoin is likely to move to next, whether or not this short-term rally will develop into a higher time frame reversal, or if we are going to see a correction back down. We are also going to be going over a very important chart on the total market cap, discussing the 42.60 level on the RSI, a level of historical significance where, when broken, has resulted in significant directional continuations in the direction of which the RSI is broken. This level may be able to help us predict where the market is likely to move next. Before we get into the video, make sure to smash that like button, show support on the channel, hit the subscribe button, comment down below if you got any questions. We post daily videos for Bitcoin, focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in taking your trading to the next level, click the pinned comment. Contact our VIP admin over here by clicking that name. You can also find a 50+ month trading track record by clicking the first link, or a 10-minute video showing you inside the channel by clicking the second link. You'll get access to two channels: the main VIP channel where we post trading setups, exact entries, targets and stop losses, and our exclusive group chats with over 700 members discussing cryptocurrency and trading on the daily. Check it out, join up, we'll see you in there. Let's dive on in. So as we can see on the short term, the market has seen a small reversal from that major $76,000 level of support marked out by the VRPV that we went ahead and showed you a few days prior to that retest. Since then, the market has seen a small recovery, and that recovery has been exacerbated by the fact that recent CPI data has come out relatively bullish. We'll touch on this in a second. With this short-term reversal, people start asking the questions, is the bottom in? We're going to try and answer that today, but more specifically focusing on what it needs to take for the bottom to be confirmed, and more importantly, what needs to happen for this reversal to really kick off on the higher timeframes. We're going to start on the market data. 24-hour volume and liquidations. Volume down 20%, sitting at 204 billion, and liquidations down 55%, sitting at 268 million. Moving over to the DXY. The DXY has hit a major level of horizontal support here at the 103.6 level. This is going to be this midline level of our horizontal consolidation. Of course, we had a failure to break above. We saw deviation, and as we expected, a loss of our horizontal high over here would result in a correction back to the midline. We have now reached that target absolutely perfectly. Moving to the S&P 500, the S&P 500 is not looking amazing here. We are still sitting underneath this weekly low. We are sitting under the 50 EMA, and the RSI is still very much negative. We do have the potential to continue down to around 5,300, worst case scenario. For the S&P 500 to begin to look good again, we need to see the weekly candle close above that 50 EMA. And we need to see that RSI push back up to break this daily downtrend. If this is able to occur, it is likely the S&P 500 will continue toward the upside. If not, we are more than not likely going to continue back into this horizontal support. So we do have the risk for further continuations, and that is present across all markets at the moment, but Bitcoin is showing some short-term relative strength. Moving over to the economic news, as we mentioned, the CPI data did come out relatively bullish. We saw the actual result come in just underneath the prior forecast and expectations, which is of course bullish. Now, the upcoming Federal Reserve interest rate decision is in 6 days' time, and currently the expectations are still relatively bearish. There is a 98% probability of interest rate pause and only a 2% probability of an interest rate cut. Even with the recent bullish CPI data, that has not changed all that dramatically. The best case scenario for the market would be an interest rate cut in 6 days' time, but during the meeting 30 minutes after a Federal Reserve interest rate decision, they have more of a bullish narrative, a bullish tone as a consequence to inflation falling at a better rate than expected. If they have a bullish tone, this could build up the narrative for a future interest rate cut, potentially moving into the next CPI meeting, which will result in the markets reversing next month. This is very important, as if we look at the RSI, it does actually predict eventually, at least through the March of around April to May, the month of April, May, it is most likely that we are going to see that RSI breakout, which could line up with a breakout on the RSI after the upcoming interest decision. And the reason we could see that momentum flip positive could be as a consequence of more of a bullish tone as a consequence of recently falling inflation. So we can see how the dominoes are starting to stack up in a way which could fall over into a bullish result. It hasn't happened yet, but we can see the potential beginning to build. A lot does rest on what the Federal Reserve says. If they do have a bullish tone and they do talk about the potential future interest rate reductions, we will very likely see the market rally. However, if they have a bearish tone, the market will likely continue to spill toward the downside. So 6 days, very, very important. Now, before we get into the crux of today's analysis, make sure to sign up to BitGet, BitUnix, or BingX. The links are down below. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll support me making this content, and you'll support yourself in your trading journey. Check it out. Takes a few seconds. Sign up, and we'll see you back in the content. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, MegaWhale team, let's go ahead and jump right back into it. Now, first and foremost, let's talk about the trend, what needs to happen for the trend to reverse, and why the total cryptocurrency market cap is going to be so significant in determining where the market goes on the macro scale. So currently, Bitcoin is in a downtrend, of course. We've been in a downtrend since essentially the beginning to mid part of January 2025. We have lost some critical levels of structural support, that being the 92,000 and 88,000 level, resulting in what was a very violent and volatile correction all the way down to the first point of support, which was 76,000. 76,000, as marked out by the VRPV, was the first level of support in this low historical resistance range, which was between $88,000 and $72,000. We saw the price retest 76,000, and we have seen a reversal ever since. Now, when we are looking for confirmations of reversals, we look for more than just the candle being green. We look for trend, we look for structure, and we look for strength. In terms of trend, we are still very much in a downtrend. In fact, we can draw our downtrending diagonal trend line from our prior highs, retesting the peaks, and we can see the price action is still in a downtrend. In terms of a structure, we do not have any relevant or clear structural formation in this price action. In fact, it has been very uncertain, it has been very choppy, but it has been in a generally reasonable and I would say predictable trends. Although the intraday movements haven't been that predictable, it has been very volatile and choppy, the overall trend has been very clear. So we do not have a clear structure developing here on the daily chart. But in terms of strength, we can still very clearly see the strength of the price action is negative. The RSI has been falling. Now, the RSI is taken from the first high within the consolidation we had above 88,000, essentially this visible range. This entire range of price action here, we can see that while the price action has been developing, the RSI has been dropping. This is an indication that momentum is still moving toward the downside. What we want to see to be confident that the trend has properly reversed is going to be a breakout on the daily RSI in conjunction with a breakout of this downtrending diagonal trend line. Only then are we confident the price action will continue this reversal in the short term into a higher time frame reversal. Now, as we mentioned, interest rate cuts and even the notion that interest rate cuts are more likely or going to happen more early will definitely push the market aggressively in that upward trajectory. But until then, the trend is still down. The momentum is still down. But what are we seeing that is bullish? Well, number one, we have retested a major support, and support is support until it is not, right? And as I mentioned in our Telegram channel, I mentioned that I was significantly more bullish here at around 76,000 than I was at above $100,000. The reason being is because what we have now seen is a full-blown correction into this next level of demand, and we have seen the price action show a degree of support here. Not only that, we are seeing a potential daily bullish divergence develop and actually play out, which is an initial indication that the selling pressure we have seen as a consequence of the loss of 88 and 92,000 is beginning to fizzle out. Now, we mentioned in our prior video, as we approach 76,000, and more specifically, as we potentially enter to 86,000, we enter a range where historical resistance will begin to pick up, and the volatility, which is bearish as a consequence of a loss of a major horizontal support, will begin to fade away. So it is likely volatility begins to drop, and the bears begin to lose a bit of strength as we approach the 76,000 and below, and we have seen that, and we have seen a short-term reversal now. As we just mentioned, the short-term reversal is fantastic, but it is not enough to be confident in a higher time frame reversal. Not only do we need structural, technical, and strength confirmation, we need macroeconomic confluence to actually predict and to be confident in these directional continuations, which is why the Federal Reserve interest rate decision is going to be so significant in 6 days' time. Now, let's take a moment and move over to another chart, and I want to move over the total market cap, and we'll come back to this because it kind of relates to this chart. A lot of people are wondering, well, are we going to go lower, or is this the bottom? Now, the best way I can answer that is by taking a look at this chart here. There are two levels we are watching. First, from a structural level, we are watching our overall macro uptrend. While the uptrend remains intact and while this level holds at support, the potential for reversals and bounces are still here. Will the reversal and bounce result in a new high? Will it result in a lower high? Will it just fail and result in a correction? These are all potential possibilities. But the concept is support until it is not. And while we have got positive momentum, or while we have got the RSI, we'll talk about this in a second, above this critical horizontal level at 42.6, we can see a retest here, a retest here, a retest here, a retest here. We are not expecting an immediate breakdown of this trend level. So that does mark this level of support, and it increases the potential for a possible reversal. So what will determine whether or not Bitcoin goes lower? We would need to see a loss of the 42.60 on the RSI on the weekly. The reason I say that is the last time we broke this level was back over here, January 2023, look what happened. We actually saw a breakout of this macro falling wedge structure, which then resulted in the macro continuation up. Furthermore, on every single retest of that level, retest number 1, we saw a retest of a trend line. Retest number 2, we saw a retest of that trend line. Retest number 3, we have seen a retest of that trend line. So we can see the significance in terms of our trend and in terms of our momentum, and the momentum can act as a leading indicator for the price to potentially lose its level. So am I more bullish than bearish? I am leaning more bullish than bearish. At the moment, I'm not expecting macro reversals, but I'm definitely not expecting an immediate crash all the way down to 50,000 unless we see this level lost. If we do drop below this level and we lose this 42.06 on the RSI, that in my opinion will confirm that we are going to move back to the 200 moving average and enter a higher time frame downtrend, If that happens, it is likely Bitcoin will continue its path under 76 and into 68, potentially even lower. So as you can tell, the overall message we are trying to push across today is, we have seen a fantastic correction, a correction we predicted well and truly in advance, all the way down to 76,000, an amazing correction for the market. However, with this short-term reversal, it has not yet been enough to confirm the bottom is in and confirm a proper high time frame reversal, especially with the FOMC meeting coming around the corner. However, with that being said, we are starting to see preliminary signs of bearish exhaustion, and we can see the market developing in such a way that could open up its potential for a reversal in a future date. That being, we are coming closer and closer to breaking out of the daily RSI. We are retesting a significant level on the total with momentum not yet breaking below the 42, and we have the potential for bullish meeting on the Federal Reserve press conference as a consequence to recent inflation data dropping. Now, I do need to stress how this is very important, because if we fail to see that news event, that meeting be bullish, we see that be more bearish, it is highly likely the markets are going to continue to correct. If we see the total market cap drop down, it is highly likely Bitcoin and the altcoin market continues to correct. So there is no position here without a degree of significant risk. There is significant risk in any decision. However, the invalidations are still very clear. So we have clear invalidations with high risk, particularly moving into FOMC. So you need to make up your own decisions what you're going to do there, of course, but they do have a potential here for a reversal. So overall, people ask me, Whale, are you still bearish? The answer is, well, we are in a downtrend, so I am aware of that downtrend, so I'm expecting lower prices. However, I am now seeing the potential that this could reverse in the trend in a future period if very specific things are able to occur over the next 7 days. So that is the analysis, guys. I'm going to leave it there. We might quickly jump into the short-term price action. Let me know what you think about this trend. This is pretty significant. Actually, one of the members showed me this in our VIP channel, in our group chat. Didn't even realize it, but very important. 42.06 rejection here. We saw the price action correct. We broke out. We saw the price action continue. Every single retest has been a reversal point for the price action to continue. If the 42.06 level is lost, that would be a negative momentum shift. The price action would likely lose the trend it's been in, and we'll see a correction to the 200 moving average, dropping the entire cryptocurrency market. But if we see the pattern repeat, which is a retest and bounce, this could mark a potential reversal point for the total cryptocurrency market, which could result in Bitcoin breaking this trend line eventually, provided the economic news is going to be bullish. So a lot of dominoes are lining up. Which way will they fall? Very hard to say right now, but we have the invalidations and we have the triggers beginning to develop, which we can use in future periods. Moving to the short-term price action, Bitcoin's price action is still looking absolutely horrendous in the short term. It is looking very choppy. We do, of course, have that hourly 200 moving average we're watching as a level of resistance. These prior highs are still in play. If we go down to an hourly chart here and zoom in, these prior highs right here is still a level of major resistance in which we're going to need to break above. So while we remain underneath this level, it is probably more expected that we see corrections back down. If we are able to break through this level and most importantly hold it as support, then we are likely to move back up. So I'll say it again, if we are able to break through this level and then hold it as support, it is more likely then we are able to move back up. However, while we are remaining underneath this level, we will likely correct toward the downside. Thanks for tuning in. Have a fantastic day. Catch you guys in the next one. See you then.